I think that means just 9 months and then we'll be in a bull market. I think he planned this perfect. Also, I saw this, David, on the week. ETH Labs has just been announced. People are asking if this is the new Ethereum Foundation. It is not quite a fork, but is started by some former EF members. We'll talk about that. Also, the Ethereum Foundation itself reducing headcount quite significantly, like something like 20 to 40%. So is this a restructuring? Is this a crisis? What does Vitalik think about this? And there was an executive order as well coming to the White House this week. It caught my attention because they were talking about quantum. Apparently, the U.S. wants to build a quantum computer, and get this, they think quantum relevant, crypto relevant computers might come by. Yeah, cryptography, according to Donald Trump. We got to watch. Cryptography relevant quantum computers could come as early as 2031, and they want all systems to be ready for that. So we'll talk about what that means for the US, what that means for our crypto protocols as well. David, before we get in, you got a shout out to make to our friends over at OKX. They're two gravitational objects, right? Bitcoin is clearly the bigger one, but Michael Saylor is maybe a planet orbiting that star. Maybe he's a really big planet. Maybe he's also, maybe this is a binary star system too.
What happens when the world's largest corporate Bitcoin holder faces a market downturn while Bitcoin itself enters a period of extreme fear? According to David, the answer could reshape how investors think about Bitcoin, corporate leverage, and crypto market risk. David reveals that the launch of another Bitcoin exchange in the United States represents a positive step for the cryptocurrency industry, as greater competition and increased trading options ultimately benefit investors. He notes that the involvement of the organization behind the New York Stock Exchange adds further credibility to the expanding digital asset ecosystem. At the same time, David argues that Bitcoin's recent price action suggests the market may be entering a critical phase, describing current conditions as blood in the streets, a period historically associated with heightened fear and potential market turning points. When evaluating companies with significant exposure to Bitcoin, David emphasizes the importance of analyzing their ability to repay debt by examining cash reserves and balance sheet strength. He points out that Strategy possesses tens of billions of dollars worth of Bitcoin, theoretically providing substantial financial flexibility. However, he warns that large-scale Bitcoin sales could create a complex feedback loop, negatively impacting Bitcoin's price, Strategy's balance sheet, and investor sentiment. David further highlights that while Bitcoin remains a scarce asset, Strategy stock can be diluted through additional share issuance under the influence of Michael Saylor. This distinction helps explain why Strategy stock has historically experienced significantly greater volatility than Bitcoin itself, particularly after trading at elevated premiums to its underlying Bitcoin holdings. If you enjoyed this Bitcoin market analysis, don't forget to like, subscribe, and share for more insights into the future of crypto and finance.
It is good to have another exchange available in the US. Like more options are better, specifically coming from the people behind the New York Stock Exchange. But David, let's get into the blood in the streets that you were teasing about. So show us some blood. This is Bitcoin, and on the US price chart, I think you have a moving average line. Yeah, I think I would ask, like, what is the probability of the company to pay me back, right? Yeah. So how much cash do they have? And then, like, cash in dollars, because I'm getting paid in dollars, so same unit of account. And then I would say, what else does the company have in terms of their balance sheet to be able to sell to go pay me back, right? And of course, if you look at Strategy, there's a lot of things they could sell. It's called Bitcoin, and there's tens of billions of it. And they could just sell some Bitcoin and pay me back. But of course, you know, that in the three bodies that you described, that, you know, a market sale of Bitcoin at some level, that kind of tanks the Bitcoin price, which isn't good for MSTR. I mean, every time he does that, I mean, we've talked about the way DATs are structured, right? Every time like Bitcoin is scarce, but Strategy stock is not scarce. So it does have a money printer, and the money printer has a name. His name is Michael Saylor, because Michael Saylor owns massive amounts of Strategy. So he's basically governance for Strategy. So he can just continue to dilute MSTR holders, and MSTR can get punished. That's why MSTR is down, 83%, and a Bitcoin is only down like 53%. Also, MSTR had a ridiculous MNAV premium previously.
Toward artificial intelligence, analysts are re-examining one of crypto's biggest corporate bets, Strategy's multi-billion-dollar Bitcoin strategy. Despite growing concerns surrounding Strategy's massive Bitcoin exposure, David reveals that the company's situation is far from a catastrophic. death spiral scenario. According to his analysis, Michael Saylor still possesses several strategic options, including the potential sale of $3 billion to $4 billion worth of Bitcoin holdings to strengthen Strategy's balance sheet and reassure investors. He argues that some of this capital could even be used to repurchase company securities at discounted prices, creating additional shareholder value. As a result, David believes that the most immediate risk facing Strategy is not bankruptcy, but rather the continued dilution of the Bitcoin value backing each common share. David further explains that a more realistic bearish outcome resembles what economist Austin Campbell described as a slow-melting ice cube, where Strategy's business model gradually weakens if Bitcoin fails to deliver the strong long-term returns investors expect. Beyond Strategy-specific concerns, David identifies three major reasons for the broader crypto market's weakness: the migration of investor attention and capital toward artificial intelligence, a temporary pause in the monetary debasement trade, and the continuation of Bitcoin's historical 4-year deleveraging cycle. In his view, the current market downturn represents another necessary phase of excess leverage being removed from the crypto ecosystem before the next major Bitcoin cycle can emerge. Lee to get back to interview.
But there is always the possibility here, and he knows he has this card, to rip off the Band-Aid, sell 3 to 4 billion of Bitcoin, and then just, be like, hey, stretch holders, see, we have it. Maybe he could use some of that cash to actually buy some SDRC.
Yeah.
That could be value accretive if he gets that at a discount to MSTR holders. And that's probably what's going to happen. One of those two options.
Mm-hmm.
I don't think unless this goes on for a long time, I don't see a death spiral scenario here, unless Bitcoin death spirals down, of course, or the more probable scenario, if you're kind of bearish on market conditions, is that it's just like a slow melting ice cube. I think Austin Campbell made this remark in a recent post I saw, which is just over 5 years, this whole thing could melt away if Bitcoin doesn't get the accretive price performance that all investors expect, and that, quite frankly, you and I expect. So three reasons why I think the crypto market is down. When I zoom out, when I've been thinking about this over the past couple of weeks, you ready for it?
Sure.
All right, the first reason is basically exactly what you said. All the attention, all the auction in the markets, all the capital is in AI. And so crypto is very much an attention economy. I mean, I think a store of value asset, of which Bitcoin is the predominantly most of the crypto economy, and then Ether, another store of value is still the underpinning of the crypto market cap, right? And that is very much an attention asset. It's very much a mimetic. Gold is too, but gold has 5,000 years of history here.
Yeah.
Just really suffering from the attention shifting to AI. That's the first one. It's probably pretty obvious. Yeah, everyone's looking at Micron and NVIDIA, and they've moved their capital and attention from crypto. But I think it bears repeating. The second is the debasement trade is on pause. And we can see evidence of this in the gold price. So gold is creeping closer to $4,000 per ounce. Yeah. And Michael Nadeau...
4-year cycle, unfazed.
It's unfazed. And Michael Nadeau wrote a post this week that I thought was really good. It was just talking about what we have to do every 4 years. He talked about the reason why is we have to deleverage. And so this is the realized price here, 1.9 trillion in Bitcoin. This is the valuation we got to in the last bull cycle, 2.5 trillion. That premium from the realized price, the amount everyone bought in at effectively, and the valuation, that $1.5 trillion premium, that was all a lot of credit. It was perps, DeFi loans, stablecoin loans, centralized all of these loans on top of that. And every single 4 years, we have to purge the credit.
The current challenges facing Bitcoin and Strategy underscore the increasingly complex relationship between digital assets, corporate finance, and broader market sentiment. While concerns over leverage, dilution, and prolonged market weakness continue to weigh on investor confidence, the absence of an immediate systemic threat suggests that the crypto market remains in a period of adjustment rather than collapse. The shift of capital toward artificial intelligence, the temporary slowdown in the debasement narrative, and the ongoing deleveraging process have collectively created a difficult environment for digital assets. At the same time, Bitcoin's historical market cycles indicate that periods of extreme pessimism have often served as important transition phases. For Strategy, The key question is no longer whether it can survive short-term volatility, but whether its long-term Bitcoin thesis can generate sufficient returns to justify its capital structure. Ultimately, the coming years may determine not only the future of Strategy's corporate Bitcoin experiment, but also the broader role of Bitcoin within global financial markets. Could Strategy's massive Bitcoin bet become crypto's next major crisis? Thanks for watching.